So a big spike in volatility yesterday after the CPI data came out. You can see here on the VIX, we had a major update. It was up over 14% of the day, 14.24% on Tuesday, and we had a little bit of a pullback today. However, I do want to show you guys a chart structure for this. And before I go into it really quick, a lot of people claim that it's impossible to chart the VIX because it's not like a typical like individual ticker or an ETF in the stock market. And even though there may be some truth to that, because it is kind of hard to chart volatility in comparison to an actual like an individual ticker out there like Apple or Google, there are key patterns that do present themselves as we've seen in the past. For example, right here, if we look at the roughly 35 to 36 level, if I highlight it up here, if I go to the rectangle that I have over here, if I highlight this like 36, 37, 35 level up here, you can see this is acted as a kind of like a supply zone as we see in the indexes and on individual tickers. We've seen 1, 2, 3, 4, 5, and 6 times it is touched all the way up around like 35 to 37 and got rejected all of those 6 times within the last year off of this level. So someone can say that it's impossible to chart VIX. However, when we get near this level, we know that there's going to be some form of, or at least in the past there has been, a pullback off this level, or at least a resistance in terms of the chart of VIX. So this is something we can carry forward. Does that always have to happen? No, but again, the technical analysis is not always going to be right. In the market, it's just about getting your probabilities correct. And since this has happened 6 times in the last year, I would argue that if we were to hit it again, there would be at the very least, a pause around this 34, 35 to 37 level on the VIX. So that's just an example there. Basically, what I have here on this chart is a key trend line from down here. This goes all the way back to November of 2021. If we drag it across, you can see here it's had 1, 2, 3, 4, and almost 5 touches off of this line. Again, not impossible to chart the VIX when you have occurrences like these. This kind of acted as a bear bait in a sense, not in a similar way that I talk about like the S&P 500, because that one actually has shorts having to cover and stuff. But we did have a big down candle here to end up under this pattern, which may seem that the VIX would be bearish because we were under. However, there's a big gap up following that, and then after we gapped up back into this chart pattern that I have continued up higher, and now we've just stayed above for a while now. The top of this line, it goes all the way back to January of this year. You can drag it across right here, and basically this is a pennant formation, and this is just getting tighter and tighter as the days go by until it will decide if it wants to go down and break down or if it wants to break up. In this video, I'm going to explain kind of my thought process on not only this but also the general market. So I want to take a step back and go to our historical flow tab here on Cheddar Flow. If you look up VIX and look up in the past month, back to August 15th until now, so September 14th, and filter for over 1 million in premium, I want to see the big orders. If we do that, we actually can see a very, very interesting story, especially if we go back to mid-August. Look at the dates on these huge orders right here. By the way, all of these orders, especially the highlighted ones, are super, super unusual, especially for the VIX. We rarely see this much premium along with this far out the money hitting the tape. So these alone are very unusual. But if we look at the date, look at this. August 17th to August 22nd is when they were choosing to get these contracts on here. If we go to VIX and see where this date was, you can see right here, look at this, the 17th, 18th, 19th, and the 22nd right here. We have literally the lowest days that we've had since all the way back in April of earlier this year. They were loading the dip around this time period right here while we were under this, had a big gap up, and ever since we've been going up. So very, very interesting and very key precision from whoever was buying these, and it seems to be different people, just because we saw a lot of different days, probably similar people for some of these orders as well. But this is a lot of premium that they were buying into these, and these most certainly were very profitable because they were going within the year as well in terms of expiration, and these were out the money from when they were buying into them. So they were loading the dip back then on the VIX before we had this big spike, which is a very key signal of potential volatility in the future when you see stuff like this. So I definitely encourage you guys to continue looking at the VIX flow as we kind of continue on right now, because if you see days like this, that is typically going to mean that there's going to be some form of downside in the near-term future for the S&P 500 at least. So you do have to be careful when you see prints like this. But other than that, I want to go over to the S&P 500, and basically what we're seeing right now is a bear flag channel pattern pattern that has continuously gone on. So for example, this back here, if we go back to the June days and July days, we had a bear flag pattern. This is the pole of the bear flag, and then this line, the bottom is the support and top is the resistance. We broke out to the upside of a bear flag. Anybody that thinks the bear flag always has to end up going down is completely wrong. That's not how the market works. The market's all about probability. One would argue that the probability of a bear flag going to the downside is much greater than the upside. However, it's not impossible that it can't break up to the upside, which is what happened right here. And because a bearish pattern broke up to the upside, in my experience, that typically means there's going to be a lot of short covering after from all the people that were loading to potentially get the downside off that. So that's what we saw right here. A lot of short covering right after we broke above. But what's very interesting is now we have fallen back into this previous bear flag channel, and we have a head and shoulders up here. We have the left shoulder, we have the head up here, and then the right shoulder, and we fell back into it. This is very bearish because we did not hold up here, plus the fact we have a head and shoulders pattern. That's two very, very bearish things just from a technical standpoint, let alone all the puts we've been seeing on Cheddar Flow, which I'll reference a little bit later in this video. But this is very bearish that we fell back into it, plus a head and shoulders pattern. We retested the bottom of this and saw a big rally, but look at this right here. This is key. We saw a big rally for 4 days and a major gap down. This is bull bait. This is the complete opposite of bear bait, which I've talked about in a lot of these videos. And if you're not familiar with that or not familiar with our videos, subscribe below, completely free. But this trapped a lot of bulls to the upside because they thought we'd have a lot of continuation or at least just a minor pullback off CPI. But after we had a major down day of 4.35% yesterday on Tuesday, this captured a lot of bulls that were betting on the upside, or at least having a retest of this like 420 level to retest the top resistance of this channel. So there's a lot of bulls that got caught and trapped, and now we're on the lower end of this line. You need to be very, very careful if we break below this line. If we break below this line, we will start to see a very strong downward flush. And also with that, that doesn't mean that if we go to the 15-minute, let's say, a lot of people like to look at like the 1 minute and the 5-minute candles throughout the day, and even the 15-minute and stuff. If we already get a flush and have a breakdown below here, it's probably going to start from a gap down below this level. I find it unlikely. It's still possible, but I find it unlikely that we're going to break through during trading hours because that'd be, or if we did break through here during trading hours, we'd see a lot of back and forth volatility. They would not make it easy, and by they I mean the market makers would not make it easy to short this to the downside because everybody is watching this level right here. Right now this level is roughly 392.5, at least during today. It's going to keep going up with time, but they're not going to make it easy on us to be able to short below this. So again, you could theoretically try to short with this as your risk, but as we saw today, we had 3 key tests, actually 4 key tests that we saw at least in the past day, 1, 2, 3, and 4, all off this level, which all of them bounced off of here. Same thing goes back to over here. We had 1, 2, and 3 bounces off here. So if bears get antsy near this level or below this level, it's definitely possible that it could still spike up above to kind of fake them out before it actually wants to make that downward move. So you need to be very careful and cautious if you try to short around these levels, just because there's a lot of volatility when you see such a key level, especially when people realize that the end goal of this, if it does fall below, is much further in terms of a flush. So do be careful around that level, but definitely watch it because it is a key pivot going forward and it will determine where the price of the S&P 500 will go in the future. So going back to the VIX, basically the pennant that I was sharing with you before, the resistance, or at least the range of resistance, it's not as precise as individual tickers or stuff like the indexes. So the levels have to be in ranges more so, just because, again, like I said, it is harder to chart volatility. But the range of roughly 30 to 32 up here is a key resistance range, which I'll just highlight for you guys. But up here, this is a rough estimate of this box, but this is a key resistance range for the VIX, which means that this will act as some form of a support intraday on the S&P 500 if this does get reached, which I believe it will get reached at some point within this year, especially. We will get up to here, and then it's going to decide what it wants to do next. Does it want to go up to 35 or that 34 to 37 range, or does it want to get rejected off of here and retest this lower end one more time? We'll have to see once we get closer to when it hits, but this is something to look for because it is going to interact with the S&P 500 if this does get hit. You have to watch out for supports on SPY when VIX is hitting our resistance ranges. It's just, you have to be super careful with it because these are going to act like back here when we saw it get rejected 6 times. This acted as major supports for the S&P 500 on the inverse. So you do have to be very cognizant of these levels on the VIX and definitely keep watching them. And then one last thing I want to talk about really quick is Apple today. This is a huge bull fake out. This is very bearish. The fact that we had a big daily candle back into my channel, which I've referenced a lot, is the bottom here is the support, top is the resistance. And I basically got it from connecting the pivots all the way back here. But the fact that we fell below after having such a bullish day previously, this captured a ton of bulls. So again, is it impossible that we go back above? No, nothing's impossible in the market. But this right here, this channel level of roughly 158.75 could theoretically be your risk if you were short, because if it gets back above, especially on a weekly candle close, then that would be bullish and would probably have continuation. But for now, it got rejected very, very hard from this channel and now is below. So in my opinion, it's only a matter of time before it continues falling further. Again, there can be a lot of volatility spikes in here. It doesn't have to go straight down. It can chop in between the range, retest here if it wants to on that line. But for the most part, this is a big bull bait that we saw up here. So definitely be careful with this thing, especially because it's Apple and it is the largest holding in the market right now. So that's going to have a big effect on the S&P 500 and also the NASDAQ. But I do appreciate you guys watching this video today. Hopefully it helped out with your trading, and I will see you guys next time.